My name is Andrew Thake, and hello and welcome to our Minds and Money 5 at 5 show, which today is sponsored by the New South Wales Government and is brought to you in association with Resource Global Network. For those of you attending 5 at 5 for the first time, the aim is 5 guests at 5 p.m. is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. A few admin announcements before we start. Please have your video switched on. And to ask a question, you can either post a question in the chat box at the bottom of the screen, or we can unmute you and you can ask your question live. For this week's show, which is our 95th episode of Minds and Money 5 at 5, we have a New South Wales themed focus. And to discuss this, we have a great lineup of guests. They are Adam Mckinnon, General Manager of Exploration and Business Development at Aurelia Metals, Peter Duerden, Managing Director of Magmatic Resources, Mel Palancian, Managing Director of Red River Resources, George Caragorge, who hopefully should be joining us shortly, Managing Director and Chief Executive Officer of Argent Minerals, Glen Diemar, Managing Director of Australian Gold and Copper, Scot Sobey, Investment Director of Pacific Road Capital. And first off, I'd like to welcome to the floor with a few opening remarks, Georgina Beattie, Deputy Secretary of Mining Exploration and Geoscience Department of the regional New South Wales Government. Georgina, I think you have a few slides that you'd like to go and share with us.
I do. Thanks very much, Andrew, and hi, everybody. It's very exciting to be here with a New South Wales focused session, and I'll try not to talk for too long because I'm very keen to hear about the projects and hear the discussion around those projects as well. Before I kick off, I'd just like to acknowledge that we're all meeting on Aboriginal lands, wherever that may be within Australia. I'm here in Sydney today on Gadigal land. And as I said, it's really good to be talking to you about mining in New South Wales. Our mission in mining, exploration and geoscience is to make regional New South Wales a preferred investment destination for exploration and mining, and we really are very committed to the industry and to supporting investment into the sector in New South Wales. As you would all know, we've got a very strong history with mining in New South Wales. The first gold rush, there was activity here. We also had the first exports of coal, and we've got a really diverse range of minerals in New South Wales. There is very strong exploration interest. And last year we had 269 applications were received for exploration titles in New South Wales, and that was the highest number since 2011. And for this year, we've got 226 applications just in the first couple of months of this financial year. So we're tracking even higher, which is great. As I said, we really support mining, and we know how important it is to have a stable government and I guess a focus on investment and a focus on a solid regulatory platform. Mining is called out in our 20-year economic vision for regional New South Wales as an engine industry. There's only a few really strong engine industries in regional New South Wales, and mining is, of course, one of those. Our regulatory framework that I mentioned, we're really committed to having a stable and providing a certainty for investors and community and the industry itself. And as part of that, we have released a future of coal statement in recent years, and also just last year, I should say, and a future of gas statement just this year. And we're working on a critical minerals and high-tech metals strategy, which will supplement our mineral strategy. And all of these documents go to, I guess, show the commitment of the government to mining, and also give certainty to industry investors and the community. The slide I've got up now is about critical minerals. We are very keen, hot to trot on the potential for critical minerals, and trying to access and I guess take advantage of the growth in global interest for those critical minerals. We have 45 critical minerals projects in New South Wales, including 10 that we would consider advanced. And we have 17 of the critical minerals located within New South Wales. So as I mentioned, we're working on a, you can see on the right there, some of those minerals and where they exist in the various basins in New South Wales. And as I said, we're working on a strategy which we intend to release towards the end of this calendar year, so in a couple of months' time. As you all know, the market for gold and copper presents a really strong opportunity for New South Wales. Copper is a great competitive advantage for New South Wales, and our critical and high-tech metal strategy will also call out the potential in particular for copper. We're working with the Commonwealth and their Critical Minerals Facilitation Office on this idea of a hub, a critical minerals hub. And you can see from the map on the slide there that there's a strong, I guess, agglomeration of where the minerals exist in New South Wales in the Central West. We want to make the most of that opportunity. We have what we call the Parks Special Activation Precinct, which is a government-supported area located in parks where the New South Wales government is investing in enabling infrastructure and faster planning approvals to try and attract investment into New South Wales. And we really like the opportunity of utilising that special activation precinct to look at some value-added opportunities for minerals processing in the state. We've got strong ESG credentials in New South Wales. The Central West has a renewable energy zone located there as well. And we've also got an excellent met sector in New South Wales. So I think there's a big opportunity for those things to come together and really to try and really boost the critical minerals investment and critical minerals exploration, mining, and particularly value-added opportunities in New South Wales. We have a dedicated team to support industry. In MEG, this has recently been set up a few months ago. It will support investment attraction to New South Wales, and it will also help the existing industry within our state to facilitate various government approvals that are required for exploration, but mostly for mining and approvals that are required across the state. So we really are focused on investment attraction, focused on customer service and supporting faster titles processing, release of pre-competitive geoscientific data to support investment, and a policy framework and regulatory framework that is clear, so that so the industry can get on with what it needs to do. There's an email address there which you're welcome to contact us if you've got any questions. And I'll stop there because I'll allow plenty of time and keen to hear the presentations that are coming up.
Well, thank you very much for that, Georgina. So I think that's acts as a nice sort of introduction into our first mining update. So I'm going to ask Adam to go and share his slides with us. And our first mining update is from Adam Mckinnon, who is General Manager for Exploration and Business Development at Aurelia Metals. Adam, I think you've got some slides that you'd like to go and share with us. Thank you.
Thanks, Andrew. Can you see the screen?
Yes, we can.
Excellent. Good. So Aurelia Metals is a Brisbane-based public company, but all of our current operating assets are in New South Wales. The company has 3 operating mines with an overall gold focus, although we do produce significant amounts of zinc, lead, copper and silver. Aurelia constructed the Hera mine near Nymagee between 2012 and 2014, which was then followed by an acquisition in 2018 of the Peak mine near Cobar. And then in December last year, we actually acquired the Dargues gold mine near Braidwood in southern New South Wales. On top of that, we've got approximately 1,500 square kilometres of highly prospective exploration tenements in the Lachlan Fold Belt in New South Wales. So the Peak mines are our largest operation with an 800,000 tonne per annum mill capacity and 7 years current mine life. Aurelia achieved payback from the acquisition in 2018 in only 4 months after we were mining very high grades from the Kronos lens at the South Mine. In 2019, a year later, we discovered the equally high-grade Kairos deposit directly below the Peak workings, and the lode has now been developed, delivering the first stope ore in June this year. Kairos continues to expand, and only last week we announced some very strong new copper results along strike from Kairos, including 7 metres at 5.9% copper, 6 metres at 5% copper, and 43 metres at 2.4% copper. To the north of Peak, we're also in the process of extending the 5.8 million tonne Great Cobar copper gold deposit, with drilling at depth announced last week. Also, we announced that the spectacular intercept 13 metres at 5.4% copper. Moving on to Dargues. So I mentioned that we acquired this asset in December last year and that was from Diversified Minerals. Dargues is expected to produce around 45 to 50,000 ounces this year, which will likely increase in coming years. The company identified that Dargues was significantly under-drilled, and we have since commenced an intensive program that aims to extend the mine life of the asset, pending necessary approvals. Last week, we announced the deepest ore grade intercept from the project to date, located at least 80 metres below and to the east of the current main lode resources. And finally, we head back to the Southern Cobar Basin to the Hera Federation Complex. Hera is an underground operation that currently operates a 480,000 tonne per annum mill, producing gold and a bulk lead zinc concentrate. The Hera deposit is coming towards the end of its mine life, but importantly, in 2019, we discovered the Federation deposit around 10 kilometres to the south, indicated by the red dot on the top of the image on the screen there. By many metrics, Federation is one of the most significant discoveries in the region in the last 30 years. It's characterised by exceptionally high-grade zinc and lead grades, and also hosts very strong gold and copper mineralisation in places. Since the discovery, we've seen rapid resource growth, now sitting at 5.1 million tonnes at 14.8% lead zinc, 0.9 grams per tonne gold and 0.3% copper. So the drilling at Federation continues to see the Tier 1 grade profile confirmed and extended, with the new resources having an average zinc equivalent grade of nearly 18%. For those who like to think in terms of gold, this is roughly equivalent to 8 grams per tonne gold. To further highlight the quality of the Federation discovery, an intercept released in June this year of 70 metres at 18.4% lead zinc represents, on a length-weighted basis, the best base metal intercept released by any ASX-listed company this year. We currently have a feasibility study underway for Federation, with the study completion to allow a maiden reserve to be published in mid-2022. An exploration decline is also planned to commence mid-next year, subject to the receipt of full approvals. Also subject to necessary approvals, early production from the deposit could begin in the first half of 2023, a little over 3.5 years after the discovery hole was announced. And that's a whistle-stop tour of Aurelia Metals. Happy to take any questions.
Okay, well, thank you very much for an excellent summary, Adam. I'd like to go and introduce our investment guest, who's Scott Sobey, investment director at Pacific Road. Scott, what sort of questions do you have for Adam?
Thanks, Andrew. Adam, just a couple of questions. You're busy progressing Federation and in the process of scaling through Darger, I think the way you say it.
Does.
Currently, it's currently, as I understand it, Aurelia's metal sort of production profile in terms of gold and base metals is kind of 50-50. As you move beyond where we are today and you bring Federation on board and you become predominantly a base metal producer from a revenue composition perspective, how do you think that that's going to impact on the way that the market values Aurelia, given that gold multiples or precious metals tend to trade at, call it, between 5 and 6 times EBITDA, whereas base metal producers tend to trade in the order of 3 to 4 times EBITDA, and you guys are currently in 2.5 times sort of territory, representing relatively attractive investment at this point in time?
Thanks for the question. Look, to be fair, if copper and zinc prices stay where they are at the moment, I'll be very happy if we become a dominant copper or base metal producer in the near term. But just coming back to your question, at the moment, it's actually a little bit more than 50-50. We're about 60-40 weighted towards gold. We're expected to stay gold dominant for the next couple of years, at least until Federation ramps up properly. Obviously, there's going to be a ramp up period for Federation. We also have a stated strategy to be focused on gold. Future activity, we will look to, focus on that gold, those gold assets. We're also, obviously, we are also very interested in the high grade base metals. And I guess what our company offers is basically a natural hedge. As everyone knows, typically when gold goes up, the base metals go down and vice versa. I know that hasn't followed necessarily in recent times, but we're probably one of the most polymetallic publicly listed companies on the ASX, and we do have that ability to shift or to optimize our production in the medium term if we need to. So,
thanks, Adam. So another question that I have is mines in the New South Wales region tend to be characterized by relatively short mine lives, in the order of 3, 4, 5 years, and that's a function of the style of the deposit. Whereas if you contrast that against some of the sort of North American, Canadian type sort of peer group, the mine lives tend to be much longer. And I think personally that enables investors to look at those investments differently and value them differently. And you see quite often a disconnect between the Canadian peer group or the North American peer group and the Australians. So you're in currently a pretty good environment. It allows for margin expansion and pretty healthy cash balances and balance sheets. Do you expect that to change the way that you think about your rolling reserve and in terms of ramping up exploration efforts in the current good times?
Yeah, look, it has been a recognised issue, especially with Cobar style deposits. They generally have a very extensive depth extent and generally not very laterally, they're not very extensive. They can, however, go proverbially to the middle of the earth, and I cite CSA as an example here, which is one of Australia's deepest mines. So that's something that the Cobar style deposits have got going for them. Look, we recognise that the short mine lives of these type deposits can be an issue, and that's why we've had a really big push to drill out some of our or all of our resources. And in fact, in FY21, or sort of in July this year, we actually announced a 63% upgrade to our resources. Now, there's going to be sort of a bow wave as we continue drilling where they will also get converted to reserves. So it is a focus for us to get our reserve, a quantity of our reserves up. And the first step in that stage was just getting that resource up. And we 63% in a year is a pretty big effort.
Yeah, and I'd agree that that's well done, Adam. Andrew, I'm not sure how much additional time you'd like to spend on this.
I think what I'd like to do is I'd like to probably just move on to the next presenter, and if we have some time, we can come back for a bit more sort of Q&A at the end, as we've got another sort of 3 great mining projects to cover off. So what I'd like to do is obviously thank once again Adam for a fantastic mining update, and Scott for your very incisive questions. But perhaps we can move on to our next presenter and our next mining update, who's Peter Duerden, Managing Director of Magmatic Resources. Peter, I understand that you've got some slides that you'd like to go and share with us.
Yeah, thanks a lot, Andrew. Yep, just sharing now. Let me know when you can see those.
Yeah, we can see them. Yeah, that's absolutely perfect, Peter.
Brilliant. Yeah, thanks a lot for having me. Great to be involved. Magmatic Resources is a copper gold junior exploration company. We're focused on the East Lachlan, which is east of the Cobar Basin. Adam's been speaking of there, although we did do a spin out early, 12 months ago, which Glen Diemar will speak to you about shortly, where we recognise some value in pooling some of our assets together and IPO'd Australian gold and copper, and that's south of the Cobar mines. But I'll be talking mainly about the East Lachlan, which is home to Australia's largest gold producer and a very, very long-lived mining operation there at Cadia Valley. Globally significant, 900,000 ounces production, roughly $400 or $500 negative all-in costs with the copper credits. $2 billion cash flow, very globally significant operation there. And linked to Magmatic's story, because we have our a major holding at Wellington North project, which also surrounds Alkane's recent Boda discovery. So this part of the East Lachlan we call the Molong Belt, and it's a red hot area and is still delivering discovery success, as is demonstrated there by the Boda discovery a couple of years ago. And we've got an advanced portfolio there that was purchased out of Goldfields back in 2014, very much a counter-cyclical investment. And we're now positioning Magmatic as a company to deliver multiple targets tested in that area in and around the Boda discovery, which I was a part of for 9 years in my career. So it's a part of the belt that I'll go into a little bit more in terms of why we think it is got more success to deliver. The company's other projects, we've also got a copper porphyry focused project at Mile, which sits within this western belt, the Junee Narromine belt within the broader East Lachlan, and about 50 k's north of North Parks, a major copper producer and gold in Australia, probably about the 5th biggest in Australia, around about 50,000 tonnes of copper production. And we've got a position within the Parks Fault Zone, which is south of Alkane's Timingly gold operations, which is turning into a multi-million ounce system in itself. We've also got the Cal operation there, Evolution's operation, which is now global resources up over 11 million ounces. So it's turning into a globally significant thing as well, and a long-lived mining operation. I'll keep moving. But yeah, I wanted to share this one. This is sort of zooming in a bit on the Wellington North project and that area north of Cadia Valley and within the Molong Belt. And there's a lot of words on these slides, but basically I think you can see in the patterns in the imagery there, that's the magnetic imagery that we tend to look for. So when we say we're in the same belt of rocks as Cadia Valley, we can demonstrate that very, very clearly. We're not nearby. It's not just a neurology thing. We are exactly in the belt of rocks known as the Molong Belt. And more precisely, we've got a very similar stratigraphic package. We call it all the similar rock types that are within that belt that characterise the Cadia area are also present in this area we call the Northern Molong Belt, or our Wellington North project. Zooming in a little bit further on that area, we've got this advanced target portfolio where we've been active, especially in this Lady Ilsa area, where we're seeing a lot of broad, low-level gold anomalism, but critically with the right pathfinder signature that we expect if we're near close by a Boda type discovery. You can see Alkane's Kaiser and Boda discoveries just here, and Magmatic's Wellington North project there in the orange. We've also got, and we'll be increasingly active on, with drilling to commence shortly, in the Benangra Goldfield, which is arguably the site of the earliest gold production in the country, in Australia. So this was before OFA and well before, 15 years before the Victorian gold rushes. And I'll show you a bit more about that shortly. We've got multiple other targets in various stages of testing, and showing pretty compelling encouragement for gold and copper. The exploration that occurred in this area was really copper focused, but as Boda sort of demonstrates, in the upper levels, there's a real gold signature, and the copper sort of comes in at depth. And so there's a bit of a change in the paradigm of how we explore in this terrain. Also, just a lot of exploration for porphyry style mineralisation in this area historically was very much focused on the magnetic highs, which you can see those red and white zones there. But both Kaiser and Boda subtly sit off the edges of those. And so it may seem very, very minor, but yeah, you're close, but not close enough. And that's really played out in this district. Benangra Goldfield produced 230,000 ounces or so at 26 grams, and two main mining complexes there. And we're going to be drilling in the near future, down dip, underneath, and a long strike from these lodes. They have an epithermal affinity in terms of their geochemistry and the minerals that occur with the veins. So these are different from, say, what you would term orogenic gold systems. So we think this is genetically associated and linked in many ways to the Boda system. And we can see the fertility evident in those epithermal veins just in terms of the gold grades from underground channel sampling, and also just tetrahedrite and some of the telluride mineralogy that's evident too in the old records. We'll use a combination of drilling plus ground magnetic high-res ground mag surveys to track the lodes. There seems to be pretty good potential, we think, to track the lodes and also just test them at depth. To touch on our copper porphyry project north of North Parks in the Duerden belt, a good way to demonstrate the prospectivity here is looking at the Geological Survey's data sets. And you can see here on the left, we have the gravity, which is mapping out zones of heavy, dense and light rocks. And very clearly at North Parks and Cow, we have these low features in those districts, which are reflecting the deep plumbing, basically the granites that are driving those systems at depth. And our Mile project, we've got a discrete feature as well within the broad, dense belt, which is the Duerden belt. And of course, we know it has to be magnetic, and we are within that belt as well. So not just that at Mile, we've got existing intercepts, historical intercepts, which there's 70 metres at 0.54. That's dirt that's mined down at North Parks. So we know we have the systems there, and we've got some great opportunities to discover the North Park style copper porphyries in that terrain. Some drilling Magmatic did early this year is also pointing towards these broad zones of copper with some moly and in places gold, very much typical of North Parks style things. You see it at different scales from the regional down to the district. We are looking at a North Parks lookalike here with the low gravity features within these magnetic complexes. And we're in the right belt to rock, and we've got the copper gold and moly anomalism to boot.
Okay. I think that's the end of your presentation. It's a fantastic summary of Magmatic Resources. Going over to Scott Sobey, what questions do you have for Peter?
Hi, Peter. Look, it's certainly an interesting region, and you picked up some good ground adjacent to some existing and established areas. You've got quite a lot of ground to cover there from an exploration perspective. I think, just remind me, how much cash do you have on the balance sheet, Peter? I think it's in the order of 5-6 million Aussie dollars.
7.5, Scott. Yeah, we did have some cash come in recently from some oppies being converted. Yeah.
Yeah. So, that's, I guess it's the nature of the beast in exploration. It's always this juxtaposition of managing this portfolio of opportunities that one has, and reading the tea leaves as you get results, and then prioritizing effort around the most encouraging results. So maybe if you can just help me understand how you think about that within your group. And I think, probably some of that is telling in the fact that you've spun out some of your other portfolio into a separate shell. And so my question is a bit of a leading question, in the sense that what happens quite often in junior companies in particular is, the shareholders get diluted progressively over time until eventually you find something really interesting. Liquidity enters, and suddenly there's a buzz around it. And so, when we get interested in exploration plays, we're really focused on how the management team goes about prioritizing how it's targeting and deploying, the funds, quite often scarce funds that they have.
Yeah, thanks, Scott. Great question there, because it really resonates with how I think about success in exploration and how to get there and achieve it, because it's a real art. You're often dealing with lots and lots of targets, and so the art is actually filtering down and identifying the key priority ones. We want to succeed as quickly as possible, and get there, and then it sets the company up on a different level. You're exactly right. What we did with the AGC spin out, which was a subsidiary company within Magmatic this time last year, we identified some opportunities that we really liked with a private company who held assets to the south of the Cobar mines. AGC and Glen Diemar will talk about those shortly. So that, and we fed in our Moorfield gold project, which is more geographically also in that neck of the woods as well, in the central Lachlan. So there was a natural sort of a natural split there. We're a fairly small team, like most junior companies, so we need to be focused corporately and technically on where the value upside is. So we're shooting for a discovery. We think we've got a good chance if we focus in areas around the Boda discovery. We understand what we're looking for there pretty well, because in the Alkane announcements we can see it spelled out pretty well in terms of what the near miss looks like at Boda. Also, we've got, Australia's the site of Australia's oldest gold mining and old shallow gold mine workings that are high grade. We also see that as a great opportunity for the company, that we can identify resources quickly, high grade resources close to a discovery such as Boda. Very, very cheaply we can realise that type of discovery at a place like Badangra. So we'll be embarking on that very, very soon. But we'll look at all sorts of ways in order to direct funding towards getting to that discovery event as quickly as possible. We've got within the portfolio, as Adam sort of touched on, we've got multiple commodities as well at our disposal. So we've got a very much a copper focused play there at our Mile project, and we recognise the gold epithermal targets in the Wellington North project. So I think we're doing it fairly well at the moment. We've had a quiet period over the last few months, but we're gearing up now to test multiple targets quickly and fairly cheaply, especially in the case of those drilling underneath the Badangra workings.
Okay. Thank you very much. Oh, sorry. Do you have one more question, Scott? This is a quick question.
Sure, quick one. So Peter, in the spin out, what I like about that is you've got two operating entities in the same jurisdiction. You're able to spread limited technical, when I say limited, in scarce supply, technical know-how across the footprint and the cost base of two companies, which drives down your costs across those companies. I think the one thing that we've seen is that as exploration activity has increased across Australia and the world generally, there's problems with availability of drill rigs and availability of people. Are you seeing that yourselves, and how are you addressing that?
Yeah, exactly, Scott. No, we're sort of seeing that that pinch that you can expect, and Glen Diemar will touch on this. I mean, we're cutting a lot of our corporate costs in half. We're sharing with AGC, our technical officers here in Orange. We're drawing on similar contractors. There's lots of synergies, as you say, and cost savings to be had when you've got a couple of entities that you're servicing. Both of these companies and the people that are involved have very deep connections. We've worked in the area for 20 years, so we've got deep connections and relationships with the critical contractors that you're referring to there. So absolutely, you can see that starting to play out, and especially with COVID, things were getting tricky. But I think Magmatic and AGC are really well placed to source the right contractors when we want them. Also, just contractors out of an operation like Boda. The fact that we have Alkane's drilling with multiple rigs in that area, we have relationships with the same drilling companies, so we are able to tap in and tap those synergies really well.
Okay. Well, thank you very much for that. In the interest of time, we should move on to our next presentation. But you will see, Peter, there's a question in the chat box for you to go and answer in your own time. So I'd like to welcome our next presenter, who's Mel Palancian, Managing Director of Red River Resources. Mel, I understand you've got some slides for us that you'd like to share.
Okay, hopefully that's coming through okay.
Excellent.
Okay. So Red River, look, thanks for having us on. So we're a producer, we're a developer, we're an explorer. The photo that you see on the front cover there is our magnificent Hillgrove operation in New South Wales. It's a fantastic mine site, long history of mining at Hillgrove, and we're about to take it on its next journey. Usual disclaimer. So Red River itself, market cap of around about $122 million, no debt. Last year we had a cash flow of around about $45 million and an EBITDA of about $43 million. So our basket of metals, we produce copper, lead and zinc in concentrates out of Thalanga in Queensland. We've also got silver and gold credits in those concentrates, and we've got gold and antimony out of New South Wales. Look, we've got some fantastic partners on board as our offtake partners, but really the DNA of the business is, produce, base metals and gold, and explore and find more base metals and gold. So we're operators. That's the DNA of the business. Thalanga. So we're currently mining the Far West mine, getting the Liontown ore body ready for production next. So hoping that will start producing next year. It's our largest ore body. It's over 4 million tonnes of resource at 12.7 zinc equivalent. But really I want to focus on Hillgrove today in New South Wales because it's really, really special and it's flying under the radar. So you can see we've got Thalanga in Queensland. We've also got another project up in Herberton, just inland from Cairns. Again, it's our basket of metals of zinc, lead, copper, tin up there as well. But really, it's the highest grade indium prospect in Australia. But we'll leave that alone for now. I want to talk about Hillgrove next. So Hillgrove, we're a couple of hundred k's inland from Coffs Harbour, about 25 k's out of Armidale, again, a major regional centre. It's a residential site, great infrastructure. So gold was discovered here and mining started in 1857. really long and rich history of mining here. It's over 730,000 ounces of gold has already been mined, and about 50,000 tonnes of antimony metal. Our current resources, we've got 7.2 million tonnes at about 4.5 grams gold and about 1.2% antimony. Got over 1 million ounces of gold and about 90,000 tonnes of antimony metal. And you can see us, in the last couple of years, we've grown the resource significantly. So I want to talk about antimony because Georgina spoke about critical metals. So antimony is a critical metal. Its main use is as a flame retardant for a lot of things, from clothing to building cladding. It really is a very unique metal that does special things. So as a flame retardant, it's second to none. Also in military applications, so pretty much all your ammunition from bullets to rockets use antimony. It's also used to toughen glass, like bulletproof glass, ceramics. It's also used in conventional lead acid batteries, but there also is an emerging technology in antimony, and that's a stationary battery for long-term storage. So this is a direct competitor to the vanadium and the lithium batteries, to basically store power generated from wind farms and solar panels. A company in the States called Ambri is in the process of commercializing this thing. I reckon this thing's going to be a winner. It doesn't have the issues with lithium where they get hot and burn down. It's a lot cheaper, and you can basically draw these batteries down to zero and then recharge them a gazillion times and they function perfectly. So that technology has been in development for over 10 years. It's getting commercialized now, and we're really looking forward to the results because I think antimony is really going to break out as a battery metal. So it's already a critical metal, and believe it or not, and this is where the special bit comes in, Hillgrove is the 9th largest antimony resource on the planet. It's something that's sort of been under the radar, relatively misunderstood, but it is really a special resource, and we're really lucky that we've got the whole belt to ourselves. So if this thing was in WA and you had so much gold, over 1 million ounces of gold, there'd be about 20 companies in the same parcel of ground that we've got. So we've got over 225 square kilometres of the Hillgrove belt. Look, modern exploration, it's untouched. The lack of drilling and sampling is really remarkable. So we're really looking forward to growing our resources here. So you can see the belt. This is the immediate belt. So our tenements are sort of, if you expand this picture by about 15 times, that's the area we've got. So we've been drilling Eleanor, Garibaldi, and now we're drilling Sunlight. And one of the things that we've recognised is that the lack of drilling and sampling here is remarkable. So the people before us for the last 30 years haven't really chased anything below about 5 grams per tonne. So really the focus has been on double-digit gold grades and above. And what we're finding is that every hole that we're drilling, we're finding a really large low-grade halo around our ore bodies. So we think that our sort of, when you talk about Hillgrove, most geologists think about narrow high grade, but that narrow high grade is surrounded by very large, wide, consistently mineralized halos. So we need to do a lot of drilling, and I'm certain we're in a multi-million ounce field here. So we've got a 30,000 metre drilling program that we're currently preparing. There's 2 drill rigs on site at the moment, but there's oodles and oodles of upside. If you see the courtyard at Hillgrove, it'd fit in my backyard. So there's lots of opportunities here to grow this thing. And even in its current state, it's the 9th largest antimony deposit on the planet. So I'm confident that we're going to grow this asset. And We're currently in the process of transitioning from the Bakers Creek gold stockpile that we've been processing for the last 9 months. So we're transitioning into the underground mine at Syndicate. So hopefully in the new year, we'll start producing some gold and antimony that we can actually bring to market. The antimony price has rocketed. It's in really, really tight supply. There aren't that many antimony mines of any reasonable scale. It tends to be a very small scale artisanal sort of mining source. So yeah, we're confident that we'll bring this thing online in the new year, and it'll be a material antimony and gold producer for Australia and New South Wales.
Excellent. If I can just interject with just a question that's coming from the audience. Any plans to mine the tungsten from Hillgrove?
A really good question. The tungsten hasn't actually been sampled. So when you go underground or you look at the core, you can clearly see that the tungsten lights up with a UV light. So yeah.
Okay. Scott from Pacific Road, what questions do you have?
Thanks, Andrew. Hi, Mal.
Hi, Scott.
Well, in hearing you talk and listening to your EBITDA profile and looking at your market cap, it gives me a little bit of a question mark as to there been somewhat of a disconnect between the value of the assets and how the market's valuing them. Do you understand why?
Yeah, look, I think the ASX, in terms of junior production companies, I don't think we get valued as fully and fairly as perhaps the North American markets. On the ASX, everyone tends to go for the explorers and the blue sky rather than the junior explorers. But really for us, if you look at the history of Red River, we pick up distressed and misunderstood assets. Thalanga is a really good example, right? So Thalanga, under our ownership, we restarted it in September 2018 or 17, and it's been going continuously for 4 years, which, if you look at the history of Thalanga, it's a great achievement, in my opinion. So we really pick up things that are misunderstood and turn them around. And I think, we're going to do the same thing at Hillgrove. It's a material, substantial resource, underexplored, misunderstood, mismanaged. That's the other thing. When you talk to our customers, so our customers at Thalanga are Trafigura and Glencore, the number 1 and number 2 traders on the planet. They're happy. We've also been selling our gold concentrates out of Hillgrove to Glencore. Again, it's a great relationship. So for us, the market will catch up. We've got no debt, and we haven't done a capital raising since the end of 2016. So we've self-funded our growth, we've self-funded our exploration, and we'll continue to run a really tight ship and grow the business.
And Mal, are you having offtake contracts in place and established with the likes of Glencore and Trafi? Are you currently enjoying margin expansion from TCs being at relatively record lows compared to historical levels, or are you contracted into a certain TC level which is not giving you that extra cream on top?
No, our TCs float on the market, so we're not contracted to a specific number. We do ride the market, and currently, copper, lead, and zinc and gold prices in particular. Everyone expecting gold to tank. Gold's been really strong, and just in the last couple of months, antimony's taken off. Antimony sort of $12,500 to $13,000 a ton US. So when people talk about copper, the price of antimony has actually rocketed, and supplies in very short. We can start supplying early next year.
It's a fairly exotic market by conventional sort of commodity standards, and probably misunderstood on across many dimensions, I would imagine. Much like lithium was a fair while back, and we've seen lithium multiples expand. as the world recognizes that we're going to be fundamentally and structurally short for some time to come. So, I'd be interested in taking a discussion offline with you and learning more a little bit about the antimony side of things. It sounds like a very interesting and exciting prospect for you guys. So well done.
Yep, thank you.
Good luck.
Excellent. Well, thank you very much for that. And let's move to our final update, who's Glen Diemar, Managing Director of Australian Gold and Copper. Glen, I think you'd like to share your slides and give us an update on your mining project.
Thanks, everyone. And thanks to Mines and Money, and also Georgina and the team for having such a good state to explore in, and lots of the great advantages of exploring in this state. And Mel from Red River, I know they were a recipient of the New South Wales government drilling grant, and they got some just fantastic results out of Curry's Lode. So really keen to see that one progress. So about AGC, Australian Gold and Copper, as Peter Duerden said earlier on, our chairman, the chairman that we share between the two companies, is a great mind, and he saw that Magmatic Resources had East Lachlan tenements and also West Lachlan tenements. So we split off the West Lachlan tenements, or the Central Lachlan, I should say, and in that Cobar district, and I am lucky enough to bring that to an IPO on the 20th of January, and it was a good time. Thankfully, Adam Mckinnon from Aurelia Metals was absolutely pumping out just incredible drill intercepts and drill discoveries at Kronos, Federation, as well at Hera, and more recently a Great Cobar. So that really helped bring light to the Cobar Basin and our district. And also we had Eris Resources and their fantastic Constellation discovery just north of our Moorfield project. So we had all these wonderful success stories coming out of the Cobar Basin and the Central Lachlan that we could really leverage off. And we've got some great exploration ground here, just over 1,000 square meters, and across 3 projects. Again, diversified gold and copper, and that's really helped us along through these market cycles. So our Moorfield project, just south of Eris Resources Constellation discovery, is probably our most advanced project. That's a gold project, and we're looking to get back on the ground there and drill a whole heap of very shallow gold intercepts there later on in November. So lots of news coming before Christmas. Cargeligo in that Cobar Basin is really our flagship project at the moment, and that's where we've been focusing on, largely due to the wet weather that we've had in New South Wales. Access there has been a lot easier to get to. Also Gundagai. So just a quick overview of Cargeligo. Georgina and your team at the New South Wales government and this did an aerial EM survey as part of a great 10-year cooperative research group that they're part of, looking undercover in the Cobar Basin and across New South Wales. And they flew this big aerial EM survey and right up through the Cobar Basin, and they're doing New South Wales government's doing other surveys through New South Wales in different areas as well. It really brought the Cobar Basin to the forefront, and the way the New South Wales government has displayed the data on their MinView portal is just world class, and it's really done the data set justice, because it's a world class data set, and it's allowed explorers and also farmers to really understand the earth beneath their feet, and work out how deep the cover is and where the edges of those basins are, and that's really important here. So we were a fantastic recipient, very glad recipient of some wonderful data in an area that has been a real success for us over the last few months, and it's coming forth. So we're just currently doing a 500-meter diamond hole into our Achilles project, which is down into one of these aerial EM anomalies, which we've followed down with geochem and also RC drilling. So some of our earlier RC holes have got sort of broad intercepts of lower grade and 5 meters at 5% lead plus zinc, and a bit of copper there as well. More recently, in our phase 2 drilling here, we got 85 meters at 0.13% copper, and it's been a real success for us. And where there's smoke, there should be fire. So we've pushed out. This project Achilles started at 450 meters long at the start, and when we IPO'd this project, now it's 3 kilometers long. We've drilled across 700 meters of strike, and we're still drilling it with great results. Base metal sulfides lenses sitting on surface. This is not deep undercover stuff, so you can still find this in New South Wales. Adam Mckinnon at Aurelia and the exploration team there found very similar looking stuff at their Dominion discovery, which was they've been working on, which is right next to Federation. So there's real synergies here between Aurelia and also Peel and this Peel Mining and this project here. So just a quick look at 40 centimeters of drill core right at the top of our drill hole there. We're drilling down underneath 85 meters at 0.13% copper, and seeing really for the first time in diamond core what this system looks like. We're really excited to be at this place in our exploration story. So a bit of base metals there, well above in the hanging wall where we're expecting them. So we've got in multiple zones of nice areas of base metals. So this is a really growing story, and looking forward to bringing a lot more news soon.
Okay.
So with the aerial EM, I mean, it's just a really great concept that the New South Wales government has allowed us all to leverage off.
Okay. Well, thank you very much for that, Glenn. Can I just turn it over to Scott for questions?
Sure.
We don't have a lot of
go easy
time.
on me, Scott.
We don't have a lot of time. I've got one, probably just one question, Glenn. So, you know, exploration technologies improved a lot in the last 10 years, and you know, these kinds of broad range, deep cover penetration EM surveys that can be done. And I watched with interest the little video that you guys had with the helicopter that showed, you know, the survey being conducted. You know, so you're now targeting that 500-meter diamond drill hole. You've got some good information that's coming out from it so far. I think a lot of people think that, you know, you see a signature on an EM survey like that, and it's got to be a pot of copper, and then you drill it and you find it's not quite like that. But the fact that you've drilled it and the fact that you've got a 500-meter diamond hole that can give you some real understanding on the structural geology is extremely important. So what does success look like for you here if you don't get the jackpot. Maybe if you can just frame that for the audience, because I think it's useful to understand that, Glen.
Yeah, great, Scott. Thanks. There were, as we said in our announcements, there were many reasons why we drilled this diamond hole, and a lot of investors at the start of the year said, just put a diamond hole straight into it, and we need to be a little risk adverse there and chase geochemistry, because geochemistry in drill holes is really, it's hard to argue with it, where geophysics, you can have multiple interpretations. So this is a learning process for us. We were ready for a diamond hole because we needed to understand better our rock packages and the structural story, which you don't get from RC drilling, Scott, and work out where those high grade zones could be within the lower grade halos. So peel mining 2 weeks ago, you asked what success looks like. Peel mining a couple of weeks ago just announced 57 meters at 3.7% copper. That's just north of us, and Adam Mckinnon, I shudder every time he announces these results because they're just so enviable, and that is really the success for us. So we're in the same rocks. We know we're in the same rocks. We're in the southern Cobar Basin. To have success in that area, that before our IPO there was only 3 drill holes in the whole Rast Trough that were deeper than 100 meters, and 2 of those hit quite good mineralization. So that's the kind of exploration play AGC is taking, and that's why Magmatic Resources saw such an opportunity there to spin it out. And we have now Magmatic, who's the porphyry explorer, and AGC, who's the high grade Cobar style. We call it Cobar style base metal gold and sort of polymetallics story. So looking for the high grade.
There's a question that's been posted. Is there interest for a central processing hub, post grade engineering of those geographically disseminated but close, Peel, AGC, and others? Would you like to answer that, Glen?
When I have some resources and reserves, I'll be talking to Adam. Don't worry. But certainly, I'm sure the explorers are in the area are looking at doing something like that. No doubt, there's a lot of smart brains up in those companies, and we just need to find it first. And we are a discovery-focused company because we came at this IPO having done all the long, slow boots on ground work. And this year alone, we will drill very close to, if not over, 10,000 meters of drilling. And for a junior, 1 year out of within the first year out of IPO, that's quite a feat. So a lot of exploration, a lot of drilling meters in the ground, and not a lot of money spent in offices. So, but a central hub in the Cobar Basins is very likely, I think, in the future. So Sandfire Resources, Glencore, Aurelia, Aeris, Peel, and Rio Tinto on our southern boundary. There's a lot of good reasons to consolidate going forward.
And then just one last quick question. You mentioned about your collaboration with the New South Wales government. How do you see that developing in 2022 and beyond?
Sure. Yeah, they've been so active in New South Wales in promoting New South Wales. So with these mineral allocation areas, the deep drilling CRC that we're all collaborating with in these areas, aerial surveys that they're doing that that explorers alike can also infill lines while they do those, and at a relatively cheap cost, because not everyone's paying mobilisation. The New South Wales government do the New South Wales Drilling Grant, which we're onto the fourth round now, I believe, Georgina, and results of that will come out in the next month or two. So the New South Wales government's really at the forefront here of pushing exploration and mining through New South Wales, and that'll absolutely continue into 22.
Okay, excellent. Well, look, thank you very much for that. And I think we've just run slightly over time, but that was certainly a really, really informative Minds and Money 5 at 5. So all that remains for me to do is to go and thank our guests, also to go and thank our sponsors, the New South Wales government, as well as the Resource Global Network. See you next time. Until then, stay safe. Thank you very much.